The International Monetary Fund has downgraded its forecast for growth in South Africa this year yet again. This time, however, to an eye-popping number, 0.1%. That's barely nothing. Concluding its consultation process, the IMF says the outlook is, quote, very sobering, with considerable downside risks. Our Washington correspondent Daniel Ryntjes asked the fund's South African mission chief, Papi, to outline her concerns.
Yes, it's not sufficient growth to ensure that per capita income increase. Population growth in South Africa is running at about 1.7%. So this would entail, unfortunately, a fall in per capita income. And also what is concerning is the increase in unemployment from already high levels.
And the youth unemployment issue has been an issue for very many years in South Africa. Are you recommending then to South Africa that they address this in particular at this very vulnerable time?
Yes, we think that creating more jobs is the fundamental challenge that the economy has and the policymakers have. What is encouraging is that there seems to be a renewed dialogue between the government, businesses and labour, and we hope that some concrete results can come out of these recent efforts.
Now, the broader international context is one of volatility with China, with the global economy, with the price of commodities. And now, suddenly, the Britons vote to leave the euro. We don't know how that's going to roll out. But that must now be putting all your calculations in the mix because of the interlinkages between South Africa and the UK.
So first of all, let me say it's too early to know what the impact of the UK referendum will be in general because we don't know the final settlement between the UK and the European Union. So what we can say now is that for South Africa, this increases the downside risks. So South Africa's growth could be somewhat lower, but I think the fundamental challenge is already there of an outlook which has quite low growth. So what the authorities need to do remains unchanged even after the UK referendum.
Investor confidence for a long time has been a big issue for you with South Africa. Are you confident that they are taking the right steps towards increasing investor confidence, particularly because of South Africa's reliance on capital flows?
So as I mentioned, I think this renewed dialogue is encouraging. So for example, one initial measure is the creation of a fund to fund small and medium enterprises, which would be a joint venture between the government and the private sector. This would be the type of things that we would need to see more of to really have a turnaround in growth prospects.
But the word sobering jumped out of the report today. Can you give me an overall assessment of how you feel things are with South Africa at this point?
If our projections materialize, next year's South Africans' per capita income will be back to 2010 level. And unemployment, which is already high, is likely to rise further. So that's the main challenge. What needs to happen is to have these reforms take hold and change the path. We are anticipating a recovery because some of the shocks that we've seen in 2015 are expected to wane. I mean, we won't have a drought again, hopefully. And some of the confidence shocks will not be repeated. Some of the shocks from the outside, like the commodity price shock, is not expected to be repeated. So we do expect a recovery, but this recovery is not strong enough.